Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange. Just remember though that this is for education purposes only, definitely not intended to be personalised financial advice. Instead, it's designed to help you on your share trading journey. Now I'll just jump across and share my screen. I wanted to show you this. This is a 2-minute assessment that I've created specifically for business owners. And this is where you can go through and discover your team's money stress profile, if you like. So this is identifying if you have good systems in place in your business to be able to help those employees that are perhaps struggling financially. Like I said, it's 2 minutes. It's a great test just to see how you stack up and maybe identify any areas that you can help assist your employees if they're struggling. Because statistically, apparently, businesses on average can be losing about an hour a day at least in productivity per employee who is struggling financially. So if you can identify this, it's a great way to put you ahead of the game. Right, let's take a look at the NZX 50. So as you can see here, I've got the main board up on the screen, and you can just make it out at the end here. We've got this really little doji, and if I hold my cursor on it, you can see that last week we opened at 13,493. We had a high of 13,516 and a low of 13,450. So very, very tight trading there. And in fact, it closed at 13,495. So it only closed basically $2 higher than where it opened. Now, that's not necessarily a bad thing, because quite often a doji can actually indicate that the market is going to run. And if I go back here to the week 29th of April this year, you can see a doji happening here. And then we got a bit of a run happen. Obviously, the market did fall and come back to that same sort of level. But since then, we've been moving up, which is great. The other thing to look at, though, if I just go back out, you can see here, last week where it closed, it's the third time that the market has in fact touched that level. So that is providing a level of resistance. If we can see the market break through that, hopefully that may happen this week, and then that can be a very good positive sign. As you can see down the bottom, there was very little volume. Let's go and put our moving averages on and just see what they're telling us. So I always use the 30 exponential, and I also overlay that with the 15. Right, I've got this up on the yearly chart, so it's making these candles daily. And looking at the daily chart here, you can see that the 15-week moving average is still trading above that 30, which is a really good sign. And they're both trending up. So again, that's positive for us, for our market. Let's go to the 5-year chart, simply because it brings these candles up to weekly candles. And if I zoom in here, you can see that the 15-week moving average has just crossed through that 30-week. So that is a good sign. But because we've got this little doji happening here, we just need to wait and see whether the market is going to break through that and rally again. Indications are at this stage that that is what could happen. I don't like trying to guess though. I'd rather wait and see what the market is actually going to tell us. The other thing, if I look down the bottom, the volume for last week, there wasn't a lot of volume when you compare it to the week before. Now, that is a good thing, because the market will always have times where it will take a breath in, pretty much go nowhere, or even have a down week, which you can see the odd red candle. And that's fine as long as the volume is quite low. So the week before we saw good strong volume. It broke above that 13-week moving average for over the volume. However, it's fallen below that 13-week last week. And that, like I just said, is actually fine. If we see, like we can see back here on the week beginning the 16th of March, you can see we've had a couple of weeks there where the market sold off and the volume was quite high and it was above that 13-week moving average. That is where it can be quite cautious. So we just need to take a step back and wait to see. But at the moment, because that volume was quite low last week, below that 13-week moving average, that is a perfectly fine sign, especially this week. If we can have another good, strong, positive week, then that will be a really good indicator for us. So not a lot else to report. I'm certainly not buying any shares at the moment. When I went through and looked at my holdings that I've got at the moment, there were certainly some that I was able to increase my stop losses on, but certainly not buying any new opportunities at the moment. Now, I really hope that's helped. This week, I'm actually doing a review for Thursday of share and review. I'm doing a review on the Oceania Bond Offer that has been made. Come back and see that. We'll teach you a little bit more about bonds. But again, like normal, if you've got a share that you would like me to review, or if you've got any questions regarding the share market or how to invest, reach out. I'm happy to help, happy to do a video on it for you. So until Thursday, take care.